Good morning. This is Bob Iacino along with Mike Arnold. It is June 13th, and this is an AM Path Chat covering the FX markets. Federal Open Market Committee for the U.S., the FOMC, begins its two-day meeting today. With the interest rate increase all but assured, it is completely priced in. 95.8% chance on the CME Group's Fed Watch tool. 95.8%. Now that is down from 99.2% yesterday. That was at 99.6% at one point. Probably has a lot to do with some of the developments with the NASDAQ falling the last couple of days. But that is essentially priced in. They will raise rates. The announcement is tomorrow. Again, it's a two-day policy meeting. Elsewhere, the EU is pushing ahead with a politically charged plan to kind of take over control of the clearing of euro-denominated derivatives. Now, this is obviously an anti-Brexit step. That's going to probably force some firms to move from London to some city in the European Union, probably Frankfurt. It'll most likely be somewhere in Germany, Frankfurt being kind of the financial center of Germany. They also announced they're unlikely to include Greek bonds in their asset purchase program for the foreseeable future. So that's going to put a little bit more pressure on Greece. You could also make it Luxembourg. Luxembourg is fairly big financial capital, not necessarily in terms of population, but in terms of banking. Inflation data in the UK showed that UK prices increased by the fastest pace in 4 years last month, rising a greater than expected 2.9%. The Stocks Europe 100 index was trading in the green as of the time of recording this. Technology shares posting their largest gain in 3 weeks after yesterday's sell-off here in the US, and I should say continued sell-off, although Samsung is getting hit pretty hard. In terms of the economic calendar, I already mentioned UK consumer prices. Again, 2.9% versus an expectation of a rise of 2.7%. Their core was higher too, 2.6% versus 2.4% expected. German ZEW survey, current situation index came in at 88 versus 85 expected. Economic sentiment, 18.6 versus 21.8 expected. And then the Eurozone ZEW economic sentiment, 37.7 versus 35.1 last. We have no real data coming out in the US today. Tonight, we do have Westpac consumer confidence, and we'll be waiting on China's retail sales and industrial production and Japan's industrial production. But I'll talk about those a little bit more in the afternoon Path Chat. In the meantime, let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours. Oh, sorry, Mike, hang on one second. And lastly, Attorney General Jeff Sessions is testifying before the Senate Intelligence Committee today about the investigation into Russian meddling in the 2016 election. So you could potentially, usually these things turn out to be nothing, but it should probably be something you pay attention to. Plenty of people live tweeting about it, commentators, and it will most likely be televised live. I'm sure it will be, not even most likely. It'll be televised live, so keep an eye on that. Sorry, Mike. Go ahead. It's all yours.
Thank you, Bob. Euro US dollar. So far, slight rally today. Finding some resistance around the 112.20 area. What we're going to be watching for is if we can get above this trend line and our significant level at the 112.36 area. Anywhere about the 112.29 to 112.36 is pretty major resistance. If we get above there, we're going to be then watching for a return to 112.58 and then the 112.78 to 80 area right up here. If we do turn around and head back lower, we do have support at 111.95 to the 112 area right in here. Then we'll be watching for a return to the slightly rising 21 exponential moving average, which we tested earlier, the 111.84 area. If we get through that, next target down is our defining point for the trend line, 111.66. And on a bigger drop, we'll be watching for the 111.37 area all the way down here with this trend line. Switching over to the pound US dollar. Big drop, now slight recovery. If we continue rallying up, we're sitting right now at a resistance level right around this 127.26 area. If we continue to rally, watch for 127.40 area, then 127.63, and finally on a really strong rally we have a declining 8 and a 37.5% gain level coming in at the 127.92 area. If we do pull back, we're going to find some support right around the 127.06 spike low and a 50% gain level, then the 126.78 to 80 level, and then if we drop back down, the major level of support is right around this 126.33 to 40 area. Switching over to the US dollar Japanese yen. Rallied up, found some resistance around this 110.24 significant level, drop back down. So on a continued rally back up, that 110.24 level will be key. If we do get through that, we're watching for 110.42 to 50 level. Then we will be watching for 110.60 to the 110.70 area. If we turn around and head back lower, 109.80 level is going to be the first key area, followed by 109.38, and then possibly down about to the 109.30. If we do break through this trend line, then we'll be watching for the defining point coming in at 109.11. US dollar Swiss, see, rallied up to the rotation zone. Then we had a very narrow range day, now turning back down. Did rally up, found some resistance just above the 96.94 level to be exact. We found resistance at the 97.00 area. So that's going to be the first key level if we turn around and rally back up. We are headed lower right now. On a continued down move, we are watching for 96.50 area, first level of support. Then the next level will be 96.20, and then we'll look for the old defining point coming in at 96.13. On a really strong rally back up, key resistance is going to be 97.20 area, declining trend line and declining 21. And if we get through that, the 97.29 to 97.35 is going to be the next resistance area. Aussie US dollar, interesting, rallied up, retested this defining point area coming in at 75.66, falling back down. So we rally back up. 75.66 is going to be key, then 75.68 area. Then if we get through that, there's not really any major targets until the 75.86 area. If we head lower, watching for very key support coming in about the 75.20 area. Then we have a double top here. It's still a potential double top. We need to get a close below this 75.19 area. If we do, it is going against the rotation zone, and even the 8 is not out of the way. 75.15 to 20 is going to be very key support we're going to be watching for. However, if we do get that close below the 75.19, then we'll be watching for a possible move all the way down to 74.68, which is here. But the key support areas before that coming in are going to be 74.99, so essentially 75 area, followed by the 74.93, then very major support coming in at 74.86 area. Just wanted to point out this potential double because it could return back down into this prior range if it goes to full target. US dollar, Canadian dollar, big drop yesterday, continued follow through move today. As we continue lower, the first major level support's down at the 132.45 level. Then we'll be looking for the 132.20 to 23 area. If we get through there, another level support, 132.13, lots of support all the way down here. Then if we get through that, 131.75 on a move back higher to kiss the trend line goodbye, and significant level coming in at 132.97. Then a continued move up would take us to 133.14, then 133.31 are the key levels higher. Finally, US dollar, Mexican peso, already finding some support around this 1809.78 level. So if we head back down 1809.78, Then we're looking for our first GAN target lower, the 1808.06 level. If we do get through that, we could eventually see a drop to 1799.83 level. Rally back up. Some key resistance coming in at 1816.29, followed by the next level we'll be watching for is 1820.11, and then we'll be watching for a very key return to 1824.74. That's all we have for you. Back to you, Bob.
Thanks for that, Michael. Thank you guys for watching, and we will talk to you guys in the next Path Chat. Cheers, everyone.